Welcome, everyone, to another episode of HR and Payroll 2.0. I'm Pete Tiliakis, and as always, I'm joined by the legendary Julie Fernandez. Welcome, Julie.
Thanks, Pete. And today we have a couple of guests. I'm itching to get to know them and to find out what's going on. So why don't you tell us who we have today?
Yes, I'm super excited. These are two folks that I spent a lot of time comparing notes with over the last several years, and just love their perspectives and research. It is Bryan Bergin and Jared Levine, who are both financial analysts with TD Cowen and have some tremendous insights and a pulse on what's going on in the HR tech marketplace and the sort of adjacencies to that. So super excited to have you guys. So welcome, Bryan and Jared. Good to have you.
Thanks for having us.
Yeah, appreciate it.
Yeah. Look, we've had 1,000 of these conversations. And so like all of our conversations, we try to see how we can bring those live and share with the audience. And, I know you guys have a tremendous pulse on what's going on. Just can't wait for you to share it with our audience. So Julie, you want to do the honors?
Yeah, the first thing we always like to do is get to know you both a little better. So I'm going to pick on Jared first and just ask Jared, how did you end up in the space that looks at HR stuff? And
so originally our background in terms of what we covered was more IT and business services. And we saw this as a natural adjacency to those areas, particularly on the business services side. And we kicked off our, coverage with ADP and Paychex, and then thought, we really enjoyed the space and found it interesting. Thought we'd, broaden it out even more and pushed into more of call it the SaaS space with the Dayforce, Paycoms, Paylocities, and Paycor here. And now we actually cover one of the public PEOs, TriNet, as well. And that's kind of what's gotten us, deep in the space for 5+ years now.
Yeah. Yeah.
And Bryan, how about you? Did you just get tapped along and find it so exciting? You didn't want to miss out, or how did that work?
Yeah. I mean, when you're in this seat, you're trying to help investors, so mutual funds, hedge funds, pensions, corporates, identify areas of opportunity. And as Jared said, we had done other work in the technology services industry, in the HCM industry, in the payroll industry, certainly dynamic, certainly fragmented, some big names that Jared had mentioned there, and one that we saw an opportunity to dive into. So we used our technology backgrounds and actually both of us accounting backgrounds too, to then go and analyze the HCM space.
Yeah.
And are you guys both kind of fully in that space? Like that's the only, I don't know if you call it a category or not, right? But like that's your world now?
Yeah, so it's a couple. We got the consulting, outsourcing, tech services channel, the HCM payroll channel, and we also do fintech and payments. And it's always growing too. We've got other stuff that we'll be working on rolling out here over the next year or two.
Yeah, it's totally interrelated, right, Pete? I mean, oftentimes we're seeing a lot of play between those spaces for sure.
Exactly. That's exactly one of the things I want to talk about today. But one of the other things I wanted to do, maybe we should level set, just talk a little bit about TD Cowen. I know Cowen from the research, working with you gentlemen. TD Bank, obviously, many people may know, may use. But tell us a little bit about the research and the work that you guys do and how it kind of differs from what industry analysts like myself do on the HR side, I guess you could say, in my case.
Yeah, sure. Maybe I'll give a background on the company, and then Jared, you want to dig in on the research side. From the company standpoint, we've both been with Cowen for many years now, and that was a public company by itself, but it was acquired nearly 2 years ago, or actually almost the anniversary 2 years ago, by TD. And we've rebranded a little bit, TD Cowen, which is a division of TD Securities, which is part of the broader TD Bank group. And it really gives us just more of a balance sheet behind our name. And in our business, we do three main things, right? We research stocks. We try and help companies with their capital and between IPOs and various M&A activity. And we also do trading, right, for our clients. So those three areas are all interrelated, and we do that across sectors. And to do that well, we got to go deep in research. So Jared, do you want to talk about the research angle?
Yeah, so we focus specifically on individually publicly traded companies, so like ADP, Paychex, Dayforce, some of the large names you've probably heard of. And then we do focus on broader industry trends that could touch on current public companies as well as potential future public companies that are currently private. Obviously, this is a very vibrant, private ecosystem within the HCM. So, we try to go deep on not just servicing the current trends, but also predicting the future trends that some of these really, rapidly growing privates are trying to approach.
Yeah, you guys do a tremendous job. I have to be honest, man. I love comparing notes with you and kind of talking shop, if you will. But maybe before we leave there, I want to just kind of talk like who's right for your research, because I think maybe some folks aren't familiar. How do they engage with it? And like, who is the kind of your key customer and can benefit from this?
Yeah, so it's institutional investors that are clients of TD Securities. So that would be mutual funds, hedge funds, pensions, but also it is the corporates as well too, in terms of, many of the public as well as private companies are also subscribed to our research through relationships. But and then we often, outreach to private companies and try and engage with them in terms of, understanding what's going on in the market in terms of similar to what you do. But yeah, just from more of a pulse on our end as well.
Yeah. No, I love that.
It's always multiple audiences, which is sometimes you have to be balanced, right? With the message, you got to be mindful of that. And but we always try to be. But to Jared's point, it's I guess number one, those institutional investors, but at the same time too, the corporates and particularly the private ones that have to pay attention to the public world and see about, how things are positioned, how strategies evolve, things like that.
Yeah. Yeah, absolutely.
No, I was just going to say that's really helpful because I think more folks are familiar with just the analysts, like in the HR space, the HR analysts who are putting out the grids and the peaks and the maps, right, of providers. And this is just a different lens. And some of the research is incredibly valuable to all sorts of consumers, no matter, whether they would directly consume your research or are just involved.
Yeah, and we benefit from the great work that individuals like yourselves do too. We're looking at those quadrants ourselves.
Yeah, absolutely. Yeah, well, you guys do a great job, I think, breaking down. I always read 10Ks of the major vendors that I work with and across the market anyway. But you guys do a great job of synthesizing that and really giving your perspective. So shout out to your research. If anyone out there is interested, I'll try to pop a link in down here. I'll get that from you guys, Bryan, and we'll make sure you guys are able to share that. But look, I want to jump right in. I got a lot of questions, and I'm excited to kind of get your perspective. So if you don't mind me putting you on the hot seat, we'll get started if that's all right. So look, first thing is, I'd love if you guys would talk a little bit about the health and the state of the HR tech marketplace, kind of what you're seeing from your vantage point and your lens, and more importantly, what are you excited about, and what are you seeing investors get excited about when it comes to the HR tech space?
Yeah, I'd frame it as it's been pretty consistent and stable the last, call it year to 18 months after, a really hot, elevated demand environment, call it from 22 to the latter parts of 23 here. It feels like we've been there was a bit of a slowdown in the later half of 23 through 24, but it feels like it's been pretty consistent here, at least the past, 6 to 12 months here, which has been good in terms of investor sentiment as, I'd say there was some increasing caution regarding, what's going to happen with the employment environment as well as demand environment. But it feels like it's been pretty consistent and stable here in terms of what we've seen. And Bryan, what would you say in terms of like what's most exciting here?
Yeah, I think, there's certainly questions right now with all the volatility in being caused by the U.S. Administration and all that change. So there are questions of, okay, what direction do we go next? Can we sustain that stability, or is there going to be some type of a deterioration on the employment front? Other things that are interesting are what's how is the M&A environment unfolding? There's been some transactions announced. This has always been an industry where we feel like there is logical consolidation, just given how fragmented it is, and that's also a big point of focus for Wall Street.
Yeah, absolutely. Yeah, the economic climate is something I do want to touch on. Like, what do we think in terms of where we're headed? But I'll kind of get to that a little bit later. But Bryan, one of the things you mentioned that I've been really focused on is that convergence between HR tech, fintech, and even some adjacencies out there. Like, what do you see in that way? Like, what do you think about what's going on there?
Yeah, I think that's certainly a long-term trend that will continue, and we've seen transactions occur here recently where you're looking at vendors that are bringing in more solutions into their arsenal. Right? They need to attack more opportunities in their client base, so you'll see them make acquisitions and things that may be adjacent to where their traditional base of business is.
Yeah.
Jared, you want to talk maybe about the Office of the CFO?
Yeah, we've seen that increasingly in the Office of CFO space. So as you guys have probably mentioned before, Paylocity, its acquisition of Airbase in terms of that spend and expense management side was a recent push there. And you've also seen companies such as Paylocity and also Dayforce in terms of more of the headcount planning, which also does touch a little bit on that office as CFO world. So yeah, we're definitely seeing that convergence. And it
Yeah.
really kicked off a few years ago, I think, with the whole earned wage access in terms of more of like that payments fintech angle. So there are a lot of areas that this sector can go. So it is interesting to see how it's been trending increasingly more in different adjacencies in recent years.
Payment services seems big there too, right? I mean, and I don't know if folks are actually acquiring each other as much as just doing the buddy hype, like they're bring a friend along and have your solution, but that feels like a biggie.
Yeah, absolutely. Partnerships are important too, and some are interesting. Yeah. So, I mean, if you think about the HCM and the payments side, more recently you had Fiserv and ADP announce a tie-up, right, with their partnership through Fiserv's Clover terminal. ADP Run, right, will be integrated in the back end to help with merchants, right? So you got to think about from the buyer side always is, okay, many of these merchants have many vendors, right? And it comes down to some level of a consolidation to make it easier to run their business.
Yeah. I thought the ADP Fiserv thing was very quiet. It just sort of snuck around the corner and came in. So that is, you're right. That is the kind of embedded sort of thing I think we're seeing with some of these solutions getting together and bringing more value to a different customer base that may not have that. So
what I think is most interesting, I mean, you guys know I'm downstream of a lot of the, B2B type stuff that happens in the world. And when it comes down to buyers, HR buyers and consumers and clients, a lot of that is just sophistication plus. I mean, like it's hard, for them to really understand, is this differentiating or is this not differentiating? And so, I find that some of the things we say, like, wow, can you believe this happened? And we're like, the buyer's like, so?
Yeah.
Like, why do I care about this?
Yeah. Until they do, until they need it, right?
Until they live it.
You mentioned, Jared, the whole point about finance getting closer to HR, right? HiBob, we talked about HiBob on here, not publicly traded, but they picked up Mosaic, which was an FP&A solution that is now giving a very nice synergy to the HR data that's available in their platform. But one of the things we were talking about, and we've kind of been dabbling in here, Julie and I've been thinking about it, is how much ERP do you think that the SMB wants, smaller markets, smaller firms want with their HCM? I'm not sure if we know yet, and how wide some of these HR platforms like a Rippling, like a HiBob or whatever are going to get in terms of just the things that they can do beyond just the HCM elements.
Yeah, that's a key debate here in terms of how this market evolves. It does seem like it's more geared towards some of these more finance type functions are more geared towards, more mid-market organizations where really small business, sub 50 probably only is going to be using a QuickBooks or Xero in terms of their G&L and might not need like an FP&A type solution in terms of their daily needs. So I think that's still to be determined. But yeah, it is kind of a consolidation play that we've been hearing from vendors in terms of, what's been driving increases in attach rates and their desire to look for adjacencies is that consolidated platform to drive potentially a better user experience, to consolidate the number of vendors a client has to deal with in terms of how this market seems to be evolving, and then potential cost savings as well, too, for that end customer.
Yeah, exactly. How about just any other trends that you guys are seeing maybe we haven't really talked about here? Anything popping up that kind of you didn't see coming that you're noticing?
Nothing too surprising here. It does feel like global, we still continue to see in terms of the global payroll front, a lot of investment there, interest there in terms of some of the consolidation of vendors or modernization of solutions. But yeah, nothing too surprising here. I'd say maybe a little bit on the office of CFO the past year was probably the key surprise.
Yeah.
A little thing called AI, I would say, is the other thing, right? So, not that we don't see it coming, but it's the question is, what is the offerings that are being proposed by the vendors, and how does it then impact their business models and their financials?
Yeah, the plays, right? How they're playing this, I think, is really interesting. And I actually think the ones that are going a little bit slower and being more cautious and purposeful will probably be the ones who will be more successful with it. I think the ones that have rushed off from a marketing standpoint, trying to maybe garner some attention out of it, I think it might be a little bit short-sighted versus the long game. But what do you think about that? You agree?
I would agree that some of the ones that may be a little bit more disciplined will have that ability to leapfrog. They can't be silent, right? They have to have to participate some way, but they also want to be rash and rush out there with the wrong model, the wrong solution. We've seen in the past automation solutions have some problems for some companies. So this is it'll be interesting to see how ultimately the the revenue models unfold. Now, some of it's just pure productivity, right? Some of these vendors across the spaces that we cover, it's about adopting these tools to become more productive and help clients become more productive. But there's a big debate in the market about winners and losers from generative AI. And also, too, even companies in the broader software space, the question of, okay, where's the money, right?
Yeah.
We're hearing a lot of marketing and a lot of conversation with dollars that should follow that.
Yeah, I think right now it's really materializing more in margin than maybe charging, right? Most of the platforms, and I've studied this a little bit in the HCM world, are kind of providing it as a part of the module, right? There's not a lot of add-on yet, but it is. I imagine it's probably coming in some forms, and it depends on the solution we're talking about. But it is going to be interesting to see how that plays out, because I think there's this idea that now there's going to be AI, things are going to be cheaper. I've actually heard some people presenting that way, and I'm not exactly seeing that yet. And I don't know that makes sense in terms of just the fact that you're stepping into an innovation cycle like any SaaS buy or even an outsourced buy, managed service buy, where you are not necessarily going to save money. You're capturing something a vehicle that you can't necessarily develop on your own, and there is a premium for that.
Yeah. We would agree with that. It feels like it could be supportive of price increases, even if vendors don't potentially charge a separate SKU for that. We've fielded more, I guess, investor questions regarding longer term impacts to overall employment, since these tend to be, price per employee. That, does this drive so much, not just specifically HR tech vendors, Gen AI solutions, but just broader Gen AI solutions? Does that reduce the employment levels at companies broadly? And then does that impact HCM vendors' revenue stream, since it is a seat-based model there? But I think it's still a little bit early, and then some of these vendors might shift to more of a subscription-based model to offset that.
I think developing that and first making your own shop internally productive and efficient, you learn things along the way, and there's such a feeling that clients are demanding this upfront for their own use. And if the back office hasn't figured out how to internalize use itself, there's some inherent risk to that. And so you're asking for it. I had a leader, as I was preparing for a conference topic, tell me, "Oh, well, you talked about AI last year, so what's next?" I'm like, "Are you kidding me? Like, we're just starting with AI, and just because people have talked about it, it doesn't mean it's not a trend. It's like it doesn't even exist in most organizations yet. So
it's like, great, you landed on the moon. When's Mars come? When are we getting to Mars? Whoa!
I can't take this off of the trends list just because it was on there, last year. That's ridiculous."
Yeah.
No, it's true. It's interesting you say that too, because other technology cycles have also had time to incubate outside of the mainstream and the public eye, right? So that's something that we've had discussions with in other parts of our coverage about, this hit everybody's feeds, everybody's talking points on day one, whereas things like cloud and other automation technologies had 5 years, right, behind the scenes working with technologists, not necessarily the mainstream, and certainly not the senior management and the boards of major companies.
Yeah. Last year we saw, I think we ended the year, shout out to George LaRoque over at One Work Tech. I think they do a great job, following the investments that are coming in here into the market. It was pretty healthy last year. And I love the fact that payroll and compliance was quite up there in the top echelon, if not the top. But what are you seeing as far as that goes in terms of investments coming into the market? Because I know things slowed a little bit from kind of that post-pandemic pop we had. What are you seeing that way? You think it's still pretty healthy?
It feels like, based on the fundings that we track, it does still seem to be pretty consistent. You're not seeing as many, I'd say, frequent outsized, unicorns being minted here as we did in, 21 or 22, but it does feel pretty consistent and stable here. But still a lot of innovation being funded, particularly around the whole AI theme, regardless of area. And broader, I'd say HCM suite vendors do tend to benefit just that view of the consolidation play in terms of what we've seen.
Yeah. How about, sorry, Julie, do you have anything?
No, well, I was just wondering about buying, innovation, AI or integration innovation, those types of innovations being incubated in small startups and then, quickly bought and incorporated as a means to kind of catch up and stay on top of that. if that hits the radar as well, or that's
those
kind of
tend to be
the
the targets of their acquisitions in terms of like tuck-in capability driven acquisitions. We've seen that a lot, particularly in the talent acquisition and talent management space. It's not been a historical strong point for our more payroll centric vendors. So definitely see that in terms of the targets they're acquiring.
Yeah. The demand for that is definitely rising, especially down market, right? They've all really need, especially the ones that are emerging out of the down market into the middle market. They need to mature their strategic side of HR. I think there's a lot of investments probably needed to help not just the vendor, but also the actual buyer, right? To get them progress. So, that's interesting. So, kind of coming back to this economic challenge, right? I think coming into 2025, there was a sort of a tone of, hey, we're going to see some new IPOs. There were some that kind of got put off until after the election, which makes total sense. Now, I don't know, right? We've seen the stock market kind of rattled a little bit with some of the tariff stuff, but what do you think about the IPO front? Like any pulse on what that might look like this year, what we could expect?
I'd say there's a lot of stops and starts, honestly.
Yeah.
There were a couple of technology deals late last year that came through. Felt like there was going to be a window open here in the early part of this year, but just given all the volatility from policy and the uncertainty caused by that and just the day-to-day gyrations in the stock market, it makes potential issuers a little bit nervous, right, about the market. So it does feel like it has extended the potential conversion of that pipeline. There's certainly good quality companies in the private markets that we would anticipate to aim coming public over the next 2 years. But whereas I think there was a lot of optimism last year that 25 was going to be a better year, right now it's a little bit more cautious, just given everything that's going on.
I mean, you got some firms that are still steaming ahead, right? I mean, Deal's made it pretty clear they're gonna try to IPO in the next year or two. You've got, I think, what Klarna is pretty much steaming toward. Not now, they're more fintech related than HR, obviously fintech. And then there's some others that are out there I know of that are fundamentally headed that way. So it's going to be interesting to see how that plays out and if those firms go forward with that now, or if it will be a 2026 sort of thing.
Yeah, it's definitely, regardless of the underlying subsector, it would be nice to just see one of these bigger ones come out, right? And some of them are probably a little nervous about being first in an environment like this. But regardless, whether it's the fintech side, the HCM payroll side, or another software sector, anything into the market would be supportive to then get some of that pipeline potentially following after. Be a nice combo to have as we go through this year into next.
Yeah, and Brian's point, that's a frequent thing we hear from some of the privates we speak to that we just don't want to be the first one out the gate here. But based on kind of the companies we talk to, it does seem to favor more of the, call it HCM suite type vendors here. And, there are a few that are more, we call it specific or more point solution focused, but primarily does seem like investors are favoring the HCM suite vendor model here versus a few years ago where there was the potential for more of a like a module type company to be a standalone public entity.
That's
a question too. Yeah, Jared, you make a good point there too, because that's kind of is it feature, is it a company, right? So Pete, to your question before about the funding world, right? It's interesting. It went from a money is free environment to money is obviously not free with where rates came up to. So you did see, you see good quality businesses now being funded. You see companies getting funded versus potentially features that were interesting back then in that environment, but now potentially get rolled up.
Yeah. Interesting.
One thing that I'd like to ask you guys about is do you see a point at which a provider has bought so many things, like when is it too much? And you're just seeing them pick up things here, there, and everywhere. And it's like, how could they possibly be operationalizing this fast enough on the back end? Or, where does that come in?
You would see that in terms of their margins, when their margins just continue to trend lower, there's just too much drag from that and they're just spending too much on resources to try and integrate that. And then even on the growth side too, if it doesn't lead to acceleration, their organic growth profile, it's probably not working out well. So those are the kind of the key things we focus on, not just the total company growth, but how much of that growth is really truly organic. And some of these acquisitions are supposed to accelerate that organic growth.
Yeah. Some firms have just gotten really good at it. They've figured out a way to make it work for them. And there is different types of acquisitions. And I think some of them, it all kind of depends on their acquisition culture in a way.
Yeah, Peter, that's exactly right. And I think too, you think about the messaging when these deals are getting done, these synergies on both sides of the equation from growth and earnings. And when that synergy commentary starts dying down, you can typically tell, all right, there may be a problem here. This isn't working. And it is. You're right. It's hard to do everything well.
Yeah, it is.
So you typically go through these cycles where you have acquisitions and aggregation, and then on the other side of it, breaking apart. And we've seen some of that certainly in the payments world. Occur as companies realized, okay, these didn't necessarily fit well. We didn't have the integration approach we should have. And now at this point, they'd be better suited as separate entities.
Yeah, makes sense. Makes sense.
I think it's been interesting too to see, maybe it's because they were one after the other, a couple of different approaches to when do you start to look at cutting overlap, right? It seemed for a while like when you had a merger and acquisition, something come together, it was pretty instant. Like that's one opportunity to cut what you expect to be overlap or fat. And then we've seen others that have happened, historically that are big ones in the HR space, like a UKG, with Kronos and Ultimate, where that's on a 2-year lag, right? When they start to make some of those decisions. And it just feels like the lag was never happened much before. Folks just kind of went into it all ready to, sort it out.
Yeah. Yeah.
Yeah, it also depends on if, I guess UKG also had the benefit of being in the private markets where there wasn't as much scrutiny in terms of the quarters. But yeah, it's definitely dependent on the investor base there. But I guess the investors in UKG were willing to make that a little bit more extended of a period.
Yeah. And more broadly, these type of times now where things do get tight and cost becomes a priority, this is when you make some of those rationalizations. So that's certainly happening across public and private companies now because the CFO is looking at everything, right? Every dollar going out the door is being scrutinized.
Yeah.
And you have to justify businesses and things you may have acquired in the past.
Yeah, I think that was a very unique merger. I worked with both firms, Ultimate and Kronos, and I think that was a very synergistic play there. Obviously, the same ownership. And they're one that I feel like, and this is my opinion personally, you can kind of see that I believe longer term, they're probably ready themselves for an IPO. If you kind of look at the new leadership that's come in and some of the ways that they're shaping themselves, you could probably see that possibly coming maybe someday. Again, well, who knows, right?
I actually feel like that lag is more helpful, to buyers and end users, right? Yeah. Because it messages that there's, sure there's synergies, but let's just put it together first. Yeah. So I know it's not the usual way.
Also at that scale too, it feels like now we've heard recently with the Paychex and Paycor potential M&A there as well too, that Paycor would continue to operate a standalone solution. So there might be an element of just the size of the organizations being a key determinant, because obviously it's a much easier to cut when it's a 10-person shop versus thousands of employees and much multiple product sets.
Yeah. I don't think that deal is actually closed, right? Is that
not yet?
Not quite yet, but obviously it'll probably get there. I'm sure. I hope it will. We talked about it, right? We covered it. It was. I think that. I mean, it made sense. It totally does. But so maybe to ask your opinion here, and not asking you to necessarily endorse anyone or anything, but what do you think? There's any brands or any types of solutions that are really nailing it right now? Categories of solutions even that you feel like are just. I mean, obviously we've talked about Deal a lot on here with all the news that they've been making in terms of just product and the acquisitions, but any brands or any just solution areas where you see it's just really nailing it in terms of growth?
Yeah, I'd say overall HCM suite vendors too, just in terms of that consolidation play. And that's across the spectrum from the SMB focus one, the very low end with like a Gusto, all the way up there to like a UKG in terms of more of that enterprise market. It feels like the earned wage access vendors continue to have a healthy market there in terms of, benefiting the financial wellness of employees in that market. And it's interesting to see more of the EOR vendors increasingly shift to more of a single solution. So whether that's, contractor payments, the EOR model or global payroll, it seems like that's been an interesting trend. And it seems like that was the right play for the ones who took that approach.
Yeah. Speaking along that lines, EOR, you think we'll see more consolidation? I think we will. I think we have to. I think there's a number of those
firms. It feels like there's always a new one announced every week, but it feels like at this point,
everybody's doing it. I just feel like it has to happen, right? There's got to. I think a lot of them are at an inflection point with their offerings, with their growth. There's a lot out there, but there's also, it's hard, right? There's a lot of churn. So it's going to be interesting to see if those more of those guys get together. Obviously, we've talked about the deal Safeguard, which was more on the payroll side. And Safeguard will now go off on its own as a standalone EOR, geo provider, as they call it, which is great for the brand. But I think they might see some more consolidation personally, from just what I can tell.
I got an area that I think is crazy, right? Because I believe there's just hundreds of vendors out there, and that's in the total rewards and recognition space.
Yes.
I mean, 240, when you have hundreds of providers that are trying to differentiate in rewards and recognition, like that just feels to me like it's obvious. Something's got to happen.
Yeah. It feels like all these categories. I think we've heard stats even in terms of payroll in the US. I think we've heard stats up to like maybe, or an estimates up to like 10,000 payroll vendors alone in the US. And then, with embedded payroll solutions, it feels like maybe that number could even grow. So it does feel like it's tough to just do standalone payroll and really anything kind of standalone. And that's why more vendors just are naturally look to adjacencies to expand their market opportunity to scale, or they just, naturally be acquired.
Yeah. I mean, I'm still talking to vendors in the HCM and payroll space that are outside the US that are now coming this way and targeting harder. I think you see Personio's put a flag here. They're going to be targeting, obviously, HiBob's leaning into the US, Darwinbox. So a lot of these little, I wouldn't say little anymore, these darling sort of startup HCMs are really expanding their footprint and starting to push into the North American market. And I think they're gonna be disruptive to the same old, the pays, right, that have been around the block for a long time and have great growth. But there's going to be some disruption, I believe, and it's kind of crazy to think that we need another solution coming to America. But there's so much still opportunity here that you can still absolutely grow. But anything you see that way? Do you see the same thing? Do you see a lot of companies?
Everyone's been pushing to go increasingly more global too. Mostly on the pay, it feels like it's most complex to do on the payroll side, but that's at least an area of investment we've seen. Even Paycom in recent years rolled out a global payroll. Dayforce has been in that market for multiple years and emphasizing that market. But it feels like increasingly everyone's going to push more and more to go outside their domestic borders just to broaden out that growth opportunity.
Yeah. Interestingly, right, the SMBs, like we just said, lot of options, still a lot of room for market TAM to be captured. Mid-market is just wide open, and then enterprise is going the other way, right? Workday and others are really going hard on international now that they've kind of saturated the upmarket here in the US. So it's kind of interesting. They're going in different directions in many ways. Yeah. All right. Well, look, I could just go on and on and on. I love talking to you guys, but let's round this out with maybe some predictions or just maybe some thoughts on what you see, kind of what we'll see the rest of the year and maybe even into 2026. Just would love your thoughts on that, and not asking you to necessarily lay any bold stakes in the ground, but just kind of broadly what you might see what we could expect to see.
Yeah, I'll kick it off here. So I'd say we probably in the next, let's say 12 to 18 months, at least one more public HCM vendor probably coming to market here would be prediction 1. 2, ongoing consolidation. I think that trend's here to stay. And then 3, just ongoing messaging and investment in the whole Gen AI, agentic AI theme here. Just don't think that's going to disappear anytime soon. Still probably vendors are figuring out the pricing model, but it's still going to continue to be a point of emphasis in terms of differentiation on the product side.
Yeah, agreed. Agentic, I think, is a great opportunity. I'm excited for agentic for the HR world. Just when you think about all of those checklists and just process handoffs and things that go on in HR and payroll, I can't wait for that to really ripen itself. So, yeah, Bryan, what do you got? What do you think?
I'll just add to some of those. So just on the agentic push, I think the fear of job displacement will be cooled down as individuals recognize this as a productivity tool. It's not replacing wholesale roles. I think in the time period we're talking here, this year, next year, right? Even the 3-year type of period, it's going to be difficult to actually take out full jobs because of that. But people can become more productive and do more interesting work as a result of that. On the consolidation, I would also say I think we'll continue to see interesting partnerships across ecosystems. So we mentioned one earlier between Fiserv and ADP, things like that. I think will continue to get pushed forward, particularly those that sell into the SMB, because there's still a lot more value that can be had there. There's too many individual solutions in that market.
Agreed.
So I'd say those two are interesting on as we think forward here the next year.
Yeah, and I want to jump off of Bryan's just a little bit when you're talking about agentic and the productivity opportunities that are there. I think it's so common for buyers to think about what can I buy or how does my product incorporate this technology advantage for me, and they don't spend enough time thinking about how does this change my employee skills, my distribution of work, the way that I organize work around different or better or smarter or agentified, types of technology. And that's always an afterthought. And it directly affects the success, the utilization, everything about how it's adopted and how much value you get out of it. And there's very little forethought, it seems, from buyers. So, they're quick to buy a tool. They're not quick to buy, some support in figuring out how to readjust their operating model or to deliver differently or staff and think about things differently.
Yeah, totally.
The change factor is huge around all of this between the companies, the existing tech you have, whether it can support solutions that will be coming to the market, whether you have data that's actually organized and structured the right way, and even the processes, right? The way things are done. They can always be done better, particularly now if you have these new applications that are coming in. So there's wholesale change that needs to happen. That's why the adoption of these tools will take time in the enterprise.
Yeah, agreed. Yeah. Okay. Interesting. Well, guys, this is so good. I love it. I appreciate it. I hope you guys, I want to actually make this an annual thing. Maybe you come back every year. We come back in Q1 after Q1 or something and kick this off. So you're always welcome to come back. Where can everyone connect with you? And I'll definitely share the links. And connect to your research as well.
Yeah, they can reach out to us over email. My email is jared.levine@tdsecurities.com.
Bryan.Bergin. And just hit us on LinkedIn as well.
Yeah, I'll share those. And how about the research itself? Is there can you guys give me the link to that? I can share that for you and we'll make sure.
Yeah, depending on the piece, we can always have conversations, and if there's interest in jumping on our list, that's something you can reach out to us through the email.
Okay, perfect, man. Awesome. And hey, where would we see you on the road? Where will I see you, more importantly?
Definitely HR Tech.
HR Tech, okay. That's your next one?
Potentially. We'll see. We'll see before then, but that's our primary one that we go to, and we'll be at some company-specific events after that as well. But we'll see.
And Bryan, you gotta come back on The Source if you're at Money 2020. I'm sure we'll be recording there. I'd love to have you guys. And maybe who knows? Maybe you guys will be at Payroll Org, any of those, whatever. Just would love to connect with you, and always happy to shine a light on what you're doing.
Yeah, we'll be at those. We'll certainly be at Money 2020 again, ETA in a couple weeks, and always interested if there's new and interesting events across these sectors. We always want to hear about them.
Yeah, absolutely. Well, thank you so much again for coming on, and it's always great to see you. So we will catch you guys next time.